Welcome you all. I am Dr. R. Krishnakumar, Associate Professor of Commerce, St. Joseph's College of Arts and Science, Autonomous, Cuddalore. In this presentation, I am going to elaborate the SEBI guidelines for an investors. Before going to the guidelines, let me explain the two aspects, the regulatory body and the structure of an SEBI. First one is regulatory body. It comprises the purpose of the regulatory body will ensure the fair practices of trade in the security markets. It enforces regulations to promote ethical practices and fair trading among market participants. Second, develop the security markets. SEBI works towards enhancing the market's infrastructure and promoting growth for better investments. Third one, it regulates security markets. SEBI establishes rules and regulations to maintain order and transparency in the securities. Fourth one, it protects investors' interest. It ensures that investors' rights are safeguarded against malpractices and fraud. So this picture elaborates the structure and organizational framework of SEBI in India. It comprises Market Regulation Department, Investment Management Department, Advisory Committees, Corporate Finance Department, Investigation Departments, Technical Committees. Market Regulation Department helps to oversee all market activities to ensure fair trading and practices. Investment Management Department supervises mutual funds and other investment schemes for investor protections. Advisory committees provide guidances and recommendations on regulatory policies. Corporate Finance Department regulates corporate disclosure and compliances to protect investors. Investigation Departments conducts through investigation into any market irregularities. Technical Committee focuses on technical aspects of regulations and compliances. Next one, functions of SEBI. Functions of SEBI towards market regulation and developments, enhanced market transparency and investors' protection. These are the various functions of SEBI towards the effective marketing security marketing operations. First one is regulatory functions. In this, it helps us registration and regulation of market intermediaries to ensure compliances and integrity. Next one, prohibition of fraudulent practices. Enforcement against fraudulent and unfair trade practices to maintain fair market conditions. Sure accusation regulation. Oversight of substantial acquisition of shares and takeover to protect investor interest. Development functions. It promotes investors' education and awareness to enhance market participation. Training intermediaries. It provides training programs for intermediaries to improve market operations. Research and development. It conducts research to develop better regulatory framework and market practices. Protective functions. Prohibiting insider trading to ensure a level playing field for all. Monitoring stock exchanges. regulative and monitoring stock exchanges to prevent market manipulation and ensure transparency. The SEBI guidelines can be focused on three aspects, that is initial offering, primary market and secondary market. First one is on the aspects of initial offering. So here the IPOs should follow SEBI guidelines with the following aspects, that is eligibility criteria. Companies must meet specific financial threshold to qualify for. Second one, disclosure requirements. A detailed prospectus is required including financial statements and risk factors. Pricing regulations. It has to elucidate or picturize the guidelines, dictate the price band and book building process for IPO pricing. Underwriting. Mandatory underwriting is required for certain offerings to ensure financial backing. SEBI guidelines for primary markets. Primary markets, you know, there is a market for new issue. Here, the SEBI ensure transparency and fairness in security issuance. So this comprises issuance of shares, disclosure standards and investors protections. Issuance of shares. It covers rules for allotment of shares and maintain fairness. Disclosure standards includes comprehensive disclosure of financial health and business prospects. Investor protections in the aspect of mechanisms to safeguard investor and interests against malpractices. SEBI guidelines for secondary markets. So this may impact improved market liquidity and investor confidence. By achieving these three aspects, that is market surveillances, insider trading norms, settlement and clearing. Market surveillances. Continuous monitoring of trading activities to ensure compliances and transparency. Insider trading norms includes strict penalties imposed for insider trading to deter unethical practices. Settlement and clearing can be achieved efficient and risk-free settlement process to enhance investor trust. With these three guidelines, the following are the recent updates to SEBI guidelines for a fresh capital. So this includes the key changes and impacts on market operations. First one is electronic financial transaction, regulatory adjustment, banking regulations. Electronic financial transactions includes a new degree will be effective from March 27, 2024, enhancing digital transaction protocols. Modification in operational framework for general warehouses and improve compliances. Banking regulations, introduction of new rules regarding initial and variation of margin obligations in banking. Future directions, innovation of SEBI guidelines may be cyber security, reasoning technique innovation and sustainable finance. Thank you.